He has just come off the back of a record payout at Apex, beating our friend Trader Kane. So now Trader Kane doesn't matter to us anymore. No, I'm joking. But absolutely incredible. Over 2.5 million in a single payout, closing in on 4.5 million in total payouts from his career. I've always said it, a future market wizard. And we're going to break down his strategy that allowed him to do that today.
So I'm going to talk mostly about intraday liquidity and volatility. So let's write that out. And I'm only going to talk about intraday because I feel like that's where most people want to start at. And usually they don't like hearing when people say you should start on the higher time frames. And I don't blame them because you're going to get more reps on the lower time frames. Let me see if I spelled that right. Volatility.
Don't worry. Don't worry.
Hopefully everybody can see that.
The comments will tell us if it's wrong.
So before I get into like the actual concepts of intraday liquidity and volatility, I kind of have to bring it back to like how markets actually operate. And I just learned this over time from reading a lot of books, like Reminiscence of a Stock Operator, how people used to operate on the floor, right? Before electronic markets were around, there was traders transacting on the floor. And a lot of times you could see where the order flow was. You could see where people's stops were. You could see where their limits were. Somebody's coming in and bidding a market. They have, they might set their limits like right away. And the easiest way that people knew where stops were just intraday highs and lows. So we might look at yesterday's high and low. We might look at the previous day's high or low. So maybe just like in the last 3 days, you're just looking for intraday, the highs and lows. So you have, yesterday's high and low. It's just really just the most recent ones that haven't been taken yet. So maybe the previous or previous 3 days, we can just say. Because typically when we're looking at a 3-day look back, there's possibly going to be highs and lows that haven't been taken yet. And the way that some of these traders used to trade was, when they would take out a previous day's high or low, they might anticipate a reversal at that specific point, or they might anticipate that buyers and sellers are going to continue pushing price in that direction. So typically what I'm looking for is I'm waiting for one of those highs or lows to be rated, and then I'm looking to either continue the trend lower if we don't reverse initially, or if we get zero follow through, then I'm looking to go the other way and possibly target the previous day's high or low.